Mid-caps buckle under selling pressure even as large caps trade mostly steady as the Israel-Iran conflict heats up. Auto and consumer discretionary gain while metals and utilities sulk. Vedanta sells 1.7% of its stake in Hindustan Zinc for over 3,300 crores via block deals. This transaction comes soon after Hindustan Zinc announces a capex plan for a zinc complex to be funded 50-50 via equity and debt. BSC CEO tells CNBC-TV18 Thursday is not a bad choice for F&O expiry, citing market share gains, while when expiry was on Friday, he expects to expand the broker base from 500 to 700 and foreign participants base to 500 in 5 years. Crude prices surged 4.5% overnight on Trump's call for Iran's surrender and fear of shipments via Strait of Hormuz being affected, but Israel not targeting Iran's oil infra and record OPEC Plus and US output keeps prices in check. The Indian government is looking to source rare earth magnets from Australia and is planning to offer incentives beyond PLI to boost sourcing ties with Argentina, Brazil and Chile. Two will be strengthened.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, Ekta Batra. We come to you live from the CNBC-TV18 Motilal Oswal studio. It's a down day for the market. In fact, after an up day in two sessions ago, the last two trading sessions, we've been seeing a bit of a decline for the frontline index. And what's interesting is that even as the Nifty bank is mildly outperforming today by not falling as much as the frontline index, the index that did well yesterday was the IT index. That has now come in for some bit of selling. The broader markets for the second day running have it a lot worse. We have more stocks declining than the number of stocks which are advancing. And what's congruous between yesterday and today's trading session is the advanced decline lines. We both started, with more stocks advancing than the number of stocks that were declining. Somewhere around 10:30, 11, we saw those lines converge. And now as we speak, 1,500 stocks in the red for about 989 in the green. Few stocks which are in the green include, the likes of Vedanta. We do have some traction that we're seeing on Avenue Supermarts. And at the same time, there are a lot of other individual stocks as well, which are seeing some traction. So far and few in between, but we do have a bunch of them which are seeing big magnitude of gains. Case in point, something like an electronic smart as well, which is up nearly 15% with decent volumes backing it. Hi, Ekta.
Hi, Mangalam. Yes, absolutely. It's definitely the geopolitics which we've been pointing out, Iran and Israel, which is really dominating sentiment as well as the market moves at this point in time. We have the FOMC meet, which the outcome today, rates are expected to be unchanged, but nonetheless, that would be an important cue to watch out for. So as of now, we have the Nifty, which is trading lower by around 0.2%. The mid-cap index also down over 250 odd points with an advanced decline ratio, which is on the declining side. But let's kick off the show with specific stocks. Hindustan Zinc is under pressure. Post a large block deal. The promoter Vedanta is the likely seller in the deal. Also, they have announced a phase 1 of their capex. Nigel is here with the details. Nigel.
Fear about Hindustan Zinc when it goes past that 500 rupee odd mark is that the government of India and Vedanta, which are the largest shareholders in the company, they could probably take that opportunity and take some money off the table. And that's precisely what's happened. So early this morning, we had a 1.7% deal that was seen on the exchanges worth around 3,300 crores. And in all probability, it's likely to be Vedanta that was the seller in today's trading session. Now, Hindustan Zinc just yesterday announced that big capex, 450,000 tons of integrated zinc metal capacity addition is what they had announced. They had said that the timeline for this is close to around 3 years or thereabouts. And the capex that they're laying out is around 12,000 crores. They also said that they'll be funding this via a mix of debt as well as internal accruals. The stock, though, is under pressure because of that large trade. And just last year, we saw both in the month of August as well as in November that you had Vedanta and Government of India. Both of them had sold some stake in this facility of around 485 to 505 rupees per share. Now, the management, they spoke to us earlier today. And they say with regard to these plans, they believe the capex of close to 12,000 crores is in line with global averages because some on the street believed that it was a little bit expensive. They also said that they've announced phase 1 and in the next 2 months or so, they will announce phase 2. And that will entail that the zinc capacity will be doubled. And finally, they also went on to say that they're giving us a rough mix that 50% of this capex will be funded via debt. The other 50% will be via internal accruals. But the reason the stock is low is because of the large trade. Vedanta always knows how to time the market well. They've gone ahead and they've taken some money off the table. Back to you.
All right, Nigel, thanks a lot for that. In fact, earlier today, we spoke with Arun Misra, who's the CEO and whole-time director at Hindustan Zinc. He spoke about the capex plan and also the capex split. Listen in.
This capacity is not just a smelter. This capacity includes, your another roaster, melting casting, fumer. No, earlier days we never used to build smelter with a fumer. Now we have taken fumer from the very beginning, and along with, of course, leaching, purification, cell house. At the same time, we'll put up a mill for processing of ore, and then, of course, mining expansion. So altogether, 12,000 crores for creating this capacity from mine to smelting, and 250,000 tons of metal. It's a good money, and to us, it's a benchmark capex that we are proposing. In a manner of 2 to 3 months, we will make entire announcement for 2 million ton project expansion. Date we will decide depending upon how we are progressing. See, roughly in my calculation, we do about 10,000 crores of PAT year on year. If we do that for 3 years to 4 years, it's about 40,000 crores we are talking about. So we shouldn't be there, and this will be also spent over about 4 years. So we have enough of internal accrual power to fund the project, but also we will have to take care of strategic interests as well. So we will take some amount of debt, maybe up till about 40 to 50% of the project cost.
Okay, so that's on Hindustan Zinc. Some positive news which is coming for Alembic, where they've received an establishment inspection report for their API 3 facility at Karkari. So that should be a positive detail for Alembic, which is just about lower by around 0.3%. So nonetheless, let's shift focus. Mangalam, you're looking at Zidus Wellness and TVS Supply Chain Solutions. These are the two stocks you're tracking.
That is correct. Because of a couple of large trades that took place in yesterday's trading session for Zidus Wellness, the large trade took place in the block window in yesterday's pre-open, where nearly 7.3% equity changed hands. And we had then, inferred that maybe it would be TPG Capital, which would have done a clean-out trade, because the size of the trade and their holding matched perfectly. So nearly 7.3% stake. The interesting part was, and the reason why the stock is higher today, is the purchaser. The buyer of that is actually Parag Parikh Mutual Fund. So PPFAS has gone ahead and bought 7.3% stake, and this is a clean-out trade. So no immediate, supply concerns as well. And add to all of this, Zidus Wellness, we all know as the company that, sells strong brands like Nycil, Complan, they're sugar-free, Nutralite, and very recently when they bought Natural or Max Protein, Right Bite, puts them in the place where the total addressable market for their products is growing. The management has said that they will target early teen revenue growth in FY26 with margins seen between 17 to 18% in the next 2 years, and they are expanding their general trade coverage as well. So all these things doing well for them, along with Right Bite, where 25 to 30% growth compounding is possible. So in a sector which is, currently parched for growth, if a company is growing in low teens with some of the categories which are growing 25 to 30%, Street likes that. Mutual funds are backing it, and in the near term, no supply pressures as there is a clean-out trade which is done. For TVS Supply Chain, the interesting part and the reason why the stock is up 2% is that there was just 1% equity that changed hands yesterday. Autumn Investments sold, but the buyer was the promoter. TVS Motors bought close to around 1% equity at 144 rupees per share. As of March, the promoters held nearly 43% stake in the company. So this purchase increases it by 1%. But more importantly, 143 is a lot lower than the IPO that the company did way back in August 2023, which, they offered shares at around 197 rupees per share. So the promoters were the ones who, diluted their stake during the IPO because it was fresh issue coming in. But at the same time, now they're buying it at a price which is much lower than the issue price, which is why the stock is higher. Interesting moves.
Okay, yes, absolutely. Interesting moves coming in for both those stocks, Zidus Wellness as well as TVS Supply Chain. Just want to point out that for Alembic, it is positive news that they've received this EIR or Establishment Inspection Report indicating a closure of an inspection. So just watch out for that. And talking about inspections, Glenmark was in focus because their Monroe facility was inspected and they have received 5 observations there. So do watch out for Glenmark as well. That stock should be in focus. We'll take a short break. We'll get you more on the markets once we're back. Stay tuned.
Welcome back. You're watching us here on Halftime Report. We do have a couple of stocks on our radar, some from the pharmaceutical end. Ekta, what is it that you're watching?
Well, yes, I'm looking at Divis Labs, which is in focus in today's trading session. That is on the back of news that Novartis and MSN have settled on a particular patent, which is the 659 patent with regards to the heart drug Entresto. Now, the legal battle for this between Novartis, which is basically the patent holder for Entresto, as well as MSN, which is looking at generic competition, is going to move to the next patent, and that expires in November 2026, and the related exclusivity expires in May of 2027. What this means is that basically there's a settlement between the two companies, and there's a possibility that MSN will not launch the drug at risk anymore or launch it possibly in July of 2025. How is Divis going to benefit from this? Now, Entresto is Novartis's blockbuster heart failure drug. It has generated around $6 billion in terms of sales for Novartis, giving you a sense in terms of how important it is. Divis Labs is expected to be a key supplier when it comes to APIs for Entresto to Novartis. Now, Novartis is facing generic competition from MSN, and they have been in this legal battle. And it was expected that MSN could probably launch the drug in July of 2025. Now, Divis is making a lot of money from this particular API supply. Estimates are that they made around 1,200 crores from it just last year. And if in case the competition is coming in earlier, which is say by July 2025, then that 1,200 crores will get diluted. So the estimates are that it could probably come down to around 700 crores. Now, if in case Novartis and MSN have settled, but we don't know the terms of settlement, we don't know when they could probably launch, that means that they could probably still make 1,000 to 1,200 crores and not 700 crores if in case they launch in July of 2025. We don't know the terms of settlement, but the positive is that there is a settlement between MSN as well as Novartis.
All right, so that's about Divis Lab, up around 1%. The stock that I'm watching out for is Avenue Supermarts, up around 4% right now as we speak, 150 rupees added on that, as the company's announced the opening of a store in Agra. Now, why this is important is because it's the first store that the company has opened in UPX of NCR. They have been present in Ghaziabad earlier, but now, they've entered middle of UP. It's the first new state that they've entered in Punjab, since Punjab in 2017. So that's a positive. And add to that, the cluster-based strategy of DMart that there is. It tells you that once they open a store in a particular geography, you can expect rapid expansion of stores out there. And that is one of the big triggers, increased pace of store expansion. The other thing we'll have to watch out for is how their product mix pans out, because FMCG margins are shrinking. Can they see higher proportion of sales coming in from general merchandise? And for the metros, their core markets, can we see some expansion in DMart Ready itself and, see some growth out there is what the street is pinning hopes on. The stock has been an underperformer, extremely expensive, but now this new foray has given it a new lease of life. The stock up 4%. With that, we'll take a short break, come back, focus on the markets. Yes Securities' Pritesh Mehta joins in with some trading strategies. Welcome back. You're watching us here on Halftime Report. The Nifty down almost 53 points, though the Nifty Bank is outperforming today, mildly in the green right now. The Nifty is holding around the 24,800 mark, and that's exactly how the day has been. Yesterday it was the IT index that outperformed. The Nifty Bank was an underperformer. Today it's flipped. We have the Nifty, which is down 0.25%, led entirely lower by the IT index itself. If you look forward, the market has seen the advanced decline ratio move much in favor of declines, but now it is fairly volatile. It is not a clear trend that we're seeing. Where does the second half go? It depends on where these indices go from important levels. So we have the 20-day moving average on both the Nifty as well as the Nifty Bank. The Nifty 20-day moving average is about 50 points higher from where we are right now. For the Nifty Bank, it's conquered, or it's just under the 20-day moving average, 55,788. Where's the Nifty Bank? 55,751. So both these indices mildly below the 20-day moving average. Second half, if they recover from here, is something that the street will be eyeing. Why do I say that? Because if you look at the options action as well, the 25,000 call, 24,900 call has seen writing 50 rupees premium, telling you 24,950 to 25,000. There would be some supply. 25,000 call writers equally active for a premium of 25 rupees. So, if the market sustains above 25,000 for a bit, these call writers will have to actually cover their positions. At the lower level, though, there is support around 24,700, which is closer to today's low as well. Why do I say that? Because 24,800 put writers fairly active, premium of 75 rupees. And you also have some writing that we've seen at the 24,900 put. Individual stocks, a lot of them on our radar. Avenue Supermarts, we just spoke about that. A lot of long positions added are there. Uno, Minda and Keynes Tech are the other two stocks which are mildly in the green today with long positions on the F&O side. In terms of stocks that may enter F&O ban, Biocon is one, which is down about 2.5%, has crossed the 95% mark for threshold in terms of market-wide position limit, goes into F&O ban today. And Irida is the other one, which is in F&O ban, may exit F&O ban today. So those are a bunch of stocks and the index as far as F&O is concerned.
Okay, all right, Mangalam. Thanks very much for that. Pritesh Mehta now joins in to tell us what he's tracking on the technicals. He's from Yes Securities. Pritesh, hi, welcome to the show. If you could just start by giving us a sense in terms of the markets. We have the Bank Nifty, which has recovered a tad bit, but nonetheless, the Nifty and the mid-cap still under pressure.
So see, when we look at the current structure of our index, so we have been grappling with several external issues, whether it's rising crude oil prices, whether it is, the geopolitical tensions, but our market is stuck in a band, between 25 and 25K. Similarly, Bank Nifty is yet to show a bit of downside. We have seen a series of lower tops coming in, but we are yet to see a decline coming in. So I think the way the structure is shaping up, we are going to see a bit of consolidation. Nothing wrong with that. We have our own proprietary Nifty top 10 index, which tracks the structure of the highly weighted top 10 stocks within the index basket, and it is moving sideways. So it tells us that market is not in a hurry. It's not going to do anything, would provide big moves either side. We're going to consolidate. This is going to be the same case with Bank Nifty as well.
All right, that's the case for Bank Nifty as well. Individual stocks, what are you backing? Because there are a lot of stocks, non-F&O stocks as well, doing extremely well. What do you have on your list today, Pritesh?
So yeah, we have a couple of buy recommendations. The first one is TVS Motors. So TVS Motors, it is outperforming the Nifty Auto Index. Now, Nifty Auto has not done, incredible in this year so far, but this particular stock is showing signs of outperformance. On the ratio chart, on the standalone chart, we can see double top buy after bullish anchor column. So target is around 3150 levels, and stop loss would be 2700 levels. And the second stock is the one which is focused in today's session is DMart. Now, DMart is showing a strong basing structure coming out of that point after the zone, and we are witnessing follow-through moves. So buy for a target of 4600, and the stop loss would be 4050.
All right, technically as well, DMart looks like it is above the 20 and the 200-day moving average with fairly strong volumes backing that counter. Pritesh, thank you for joining in. We'll take a short break on that note. On the other side, we have Manisha Gupta joining in with all things commodities.
Welcome back, and joining us on the show now is Dr. Claudio Kovrig. He's founder and lead analyst at Kovrig Analytics. Claudio, hi, good to have you. I know you're attending a sugar conference in Bangkok right now, and yes, sugar is a topic of discussion also because we're looking at prices in the global markets trading at a 4-year lows right now with the kind of sell-off that we've seen in the New York session yesterday. There is good crop with major producers right now, but is that impact now baked into the prices?
Yes, thank you for inviting me. It's always a pleasure to be here with you. The thing is, in the sugar market, we have some bearish fundamentals on spot. Brazil is producing a lot, and there is not too much demand. So the demand is kind of lagging. Either people are expecting lower prices, or maybe they already have some stocks, and then these stocks are not getting consumed. Now, the problem is the actual conflict that we have in the Middle East, and then this is very supportive for crude oil. That's why we've seen some spike in price on Monday, because we have a lot of participants in the sugar market, our producers, consumers, refineries, but also the funds. And then the funds were about 95K lots short, and they still have a lot of room to go to 200K lots short. So that's why now they have to see with their risk management departments if they are allowed to go so short in such a turmoil. We've seen the reaction in the crude oil prices. So whenever you have this kind of conflict, generally you have to cover the shorts. But many people in the market, they think that sugar still has to trade its own fundamentals. And then what are these fundamentals saying? Are saying that, yes, we had a floor, which was led by the Chinese import arbitrage, and Chinese import arbitrage was open at around 16.5 cents without considering any cash premium in the domestic market. But then now the next floor is the ethanol parity in Brazil. And then the ethanol parity in Brazil is much lower. It's about at 15 cents for some meals, for other meals is higher. And what means this for sugar? It means that if we go so low, this means that the producers in Brazil will reconsider their position on producing sugar or doing more ethanol. So unless we see a reaction from Brazil, because Brazil has now 65 to 70% of the world's trade on raw sugar, right? So they are big exporters. So they need to do something to see now a support. So, and this support now, unfortunately for them, is at 15 cents because Petrobras also lowered gasoline prices. They precipitated a bit, I would say, of lowering gasoline prices was right before the conflict ignited in the Middle East.
Oh, well, absolutely. Claudio, also, I'm looking at various numbers right now, and while USDA does seem to feel that we're looking at a big surplus this time around, the International Sugar Organization's numbers are quite different. How do you read both of these very, very contradicting numbers?
Well, many institutions, they have different numbers, right? We are analyzing and we are going on our forecasts. We see a surplus of sugar next season, but this season is quite imbalanced. Why? This season we had plenty of, let's say, disappointments, especially in India. We had lower production there. We had low production in Pakistan. We had low production in many countries. Now, the thing is that, the funds would look on ahead. So what we will have in the next season, right? And then the next season for us is in a surplus of about 4.2 million tons. This is because we have the ongoing crop in Brazil, which looks good. Then we will have a recovery in the Indian production. We will have a recovery in the Thai production. But the thing is how consumption is reacting, because everybody discusses on production, but consumption was lagging. Consumption was kind of stressed. You see, in India, for example, if you compare the numbers from last year with the numbers to this year, we've lost 1 million tons of sugar consumption. Okay, it was not really a loss because practically the alternative exports have been replaced. Domestic pipeline has been reduced, so the drop is not so much. But okay, in the stats, you have to work with what you have, and then this consumption that was lagging is also pressuring the market now. So we see a surplus now. A 4.2 million tons surplus estimated for next season is not a very big surplus, right? We had seasons with surpluses of about 10 million tons or 11 million tons. But the small problem here is that, okay, where is this surplus going to be? And India is a country with surplus next season. What they're going to do with these stocks, they easily can carry stocks of 8 million tons, 10 million tons from one year to another. So this sugar, even if it appears in the stats, it is locked in. You cannot export 2026 sugar from India. Sure. It's a ban on export. Another thing is that Indian sugar to export is expensive. It's expensive. It's about 20 cents for raw sugar and above 21 cents for white sugar, right? So then the market has to come up to the Indian parity level if indeed needs this sugar. But we are very far away from this period.
Kind of numbers.
Next year, probably in Q1. For the moment, we have this pressure.
All right, Manisha, thanks very much for taking us through that conversation with regards to sugar prices. For the markets, the mid-cap index is under pressure. It is down around 0.4%, but we need to take a break. On the other side, we'll bring you an exclusive conversation with Cognizant's top brass on their billion-dollar AI bet. Stay tuned.
Welcome back. Metals are selling off as well right now as we speak. We do have GSW Steel, Tata Steel, both of them at the low point of trade. The Nifty Metal Index actually is lower as well. Now there is something with regards to FASTag. If you're traveling around the country, annual FASTag based pass designed exclusively for non-commercial private vehicles, which is worth 3,000 rupees one for the full year, effective from August 15th, 2025. So this Independence Day, you can have a FASTag-based pass, which is valid for 1 year from the date of activation or up to 200 trips. It will be very interesting for all passengers and drivers of passenger cars itself. But let's get you some exclusive offerings. CNBC-TV18 has gone inside Cognizant's new artificial intelligence lab in San Francisco. Cognizant has made a billion-dollar bet on AI. And to talk more on that, Shireen Bahan caught up with Surya Gumadi, who's the President Americas, and Babak Hojat, who is the CTO AI at Cognizant.
This big billion-dollar bet that Cognizant has decided to make on AI, and I think it brings to bear the larger question facing Indian IT services companies today. In an AI world, how relevant will Indian IT services companies be?
I think, they're going to be very relevant. First of all, the $1 billion bet that we made was in 3 dimensions.
Yeah.
Getting a talent ready for the AI era, getting the infrastructure ready, which is the AI labs, and then, building solutions, custom solutions for our clients. The Indian IT services companies are right in the middle of building those solutions, whether it is getting the data ready for the AI era or building the AI relevant solutions. And the $1 billion bet we have made is paying off really well for us. And our clients are loving it, our markets are loving it. And, we like it, and we are doubling down on that.
You are doubling down on that. So the question that everyone is asking at this point in time, is this going to be an existential crisis for the Indian IT services industry? You don't believe that to be the case?
No, I don't believe that at all, because it's like any other technology revolutions that we have seen in the past. In the initial phases, it appears that it's going to take away a lot of jobs, or it's going to be a significant threat to the coders and things like that. But
or a disruption to the business model as it's existed.
Correct. And the initial thinking or the initial fear was that, but as we get deeper into the agentic era, so I think, a lot of human intervention is needed to manage the agents, to build agents and orchestrate the agents. The jobs might morph into something different, but I don't think there'll be an existential crisis or existential threat.
What are some of the big use cases today that you're seeing that enterprise adoption is kind of, taking up in a big way?
It cuts across the board. And I think that transition is happening from, these very obvious low-risk use cases to, something that actually is in the mainstream of the process of a company. And what's interesting is that we talk about ROI. The moment you talk about an agent, you're assuming some level of autonomy that the agent takes. Autonomy means lower cost and perhaps more efficiency. So you can get that across the board. However, when you actually identify a system, you're also looking for increased quality, improved quality. Quality is a function of the domain in which you're actually implementing something. So it takes that leap of faith to go, okay, where else do I apply this, and how do I measure that ROI to see that it goes beyond just the cost aspect.
What does this mean in terms of spends now, Surya? When we talk about large deals that are happening, whether it's the $100 million kind of deals or even larger deals, I mean, is there a way to understand how much of that is being driven by AI spends at this point in time? Or is it still the largely bread and butter business that's driving spends?
No, actually, the spend is pivoting towards AI. I think there was a recent research by PwC, I guess, where 88% of the senior executives polled said that they're going to increase their budgets towards AI-centric solutions. So I think, we clearly see that there is a spending pivot in that direction. And, when it comes to large deals, Shireen, it's very hard to draw a line as to where AI stops or where AI starts. So the AI is integral part of the large deals. The way we are approaching and the way the clients are thinking as well is to leverage AI to unlock the trapped value in the existing business and use that unlocked value to fund transformation, again powered by AI. In other words, leverage AI to address the cost equation and use the gains from there to accelerate the growth equation, again powered by AI. The couple of large mega deals that we mentioned recently, we approached it with exact same construct. We went to clients articulating how much of value can be unlocked from their existing setup, and we enabled them to fund that to drive growth or transformation powered by AI. So that's how clients are approaching.
So, do you see more of these large deals or mega deals now on the cusp, on the anvil, even though it is an uncertain time, and we've seen that drop in this quarter? But do you believe as the uncertainty ebbs, we're likely to see more of the large and mega deal conversion?
This framework will gain widespread acceptance is what we believe. And that translates to a large deal. We have proven the point in 2 cases in the recent past, and we have good pipeline with the same construct, where we are approaching clients with, saying that we can we can unlock the trapped value, and then we can help you fund transformation. By construct itself would become a large deal, and that would be beneficial to clients, and they don't have to look for more additional capex to, drive transformation. And we believe that this is going to prompt few more large deals in the market.
All right, and you can catch some of the biggest voices from Silicon Valley all through this week in our special offering, Voices from the Valley, every evening at 6:30 p.m. Welcome back. Well, let's focus on the insurance space now. Sources tell CNBC-TV18 that after IRDAI, our finance ministry is also likely to have sought hike in premium and motor third-party premiums. Yash joins in with more details on this.
Well, this has been the single largest demand by the general insurance industry, which is to be given a hike in motor third-party premium. Do remember that motor insurance, under that, motor third-party premium is what is regulated, and for any hike or any revision, the Road Transport Ministry has to have an approval in the first place itself. We had reported a couple of weeks ago that the insurance regulator had sought an average of 18% hike in the motor third-party premium, under which in one of the segments, in fact, the hike which was sought was about 22 to 25%. What we've been given to understand is that the Finance Ministry has also echoed the same sentiments, seeking a hike to the tune of similar to what the insurance regulator had asked for. That is an average of 18% in the motor third-party premium category from the Road Transport Ministry. Also, what we've been given to understand is that the Road Transport Ministry is actively considering providing this hike to the industry. Do remember that this hike hasn't come through in almost about 4 years, so it is very crucial for the industry and the motor portfolio of general insurance companies as well, and the Road Transport Ministry actively considering providing this particular hike. Any decision from the Road Transport Ministry, according to our sources, could come in the next 1 to 2 weeks as far as the motor third-party premium itself is concerned. How big of a relief could this be if it comes through? Well, about an average of 18% hike or a 20% hike in motor third-party premium could bring a 400 to 500 basis points improvement in the combined ratios for the general insurance companies.
Okay, all right, Yash, thanks very much for that. So that's an important update coming in on the insurance space. Well, just a quick update on the markets as well. The mid-caps have now accelerated in terms of losses. So now at the low point of the day, down around 0.6%. The advanced decline ratio has worsened. So we have almost, we have around 1,500 stocks advancing to around 2,400 stocks declining. Well, on that note, we need to wrap up on Halftime Report. Business Lunch will take all the action ahead.